Alright everyone, Cowboy Trades here, welcome back to the channel for another update on JASMY. So since our last video 5 days ago, it seems like the price has started to move to the downside, down almost 14%. So let's talk about what's going on, let's discuss what's happening in the lower time frames, we'll work our way up and then wrap up the video on my macro price target. So starting off on the 4-hour time frame, as we discussed in our previous video, round about here at the 6.9 cent region, the 4-hour EMA ribbons were flipping bearish. You can also see we were moving to the downside of this ascending line of support, and we had this 4-hour bearish divergence playing out. Now the bearish divergence on the 4-hour has pushed price lower since our last video. You can see that we've actually lost this line of support. If I quickly get rid of this so we just got a little bit of a better view, we are starting to fall beneath not only this line of support in place since early January the 6th, but we've also lost this even lower support trend line which has been in place since the 1st of February. So we're starting to lose quite a lot of support right now on the lower time frames. You can still see this 4-hour bearish divergence is pretty much complete at this moment in time because the price hasn't moved back up to this trend line. So I will be keeping this chart, keeping an eye on it, but you can still see that the RSI potentially has a little bit of room to move to the downside for one final lower time frame leg down before potentially we get a bounce and then a lower high. Now, moving on to our next chart on the daily time frame, we discussed this range high and range low SFP pattern, also known as a swing failure pattern. Now, if we zoom out, you can basically see this range, from this top over here to this low down here. We spent a decent amount of time trading in here. We then broke to the bottom of this range. We made a new low, but this was a range low SFP swing failure pattern because we quickly moved back into this range. So you can see most of the data is traded right in this range. The range lows, we had a SFP pattern and move back up, and over here you can see the range highs, and we had a range high SFP pattern, a swing failure pattern, moved above this range and then very quickly moved back into the range. So once again, we're still trading in this higher time frame range. The top of this is round about 6.9 cent, the bottom of this is at 3.3 cent. And how these SFP patterns normally work is if you do have a swing failure pattern, a failed move equals a fast move in the opposite direction. So you have a failed move to the downside, you fail to break down, you normally move back up to the top of the range. If you have a failed move to the upside, so you fail to break the upside of this range, you have a failed move equals a fast move in the opposite direction, meaning we should probably be heading down to the bottom of this range, which is about another 44% drop, pretty nasty. But as you can see, since we talked about this in our last video, talking about how we were kind of destined to come down, we have started to break down 14%. Of course, this is not my macro price target. I'll once again update you on that at the end of the video. One other thing I do want to highlight, if we get rid of this for just 1 second, you can also see the range lows back in May. This was support, 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 this was support. We broke back beneath it, came all the way back up the other day, retested this as resistance, and now we've solidified a lower high. We've broken down, we've bounced up a little bit. In the lower time frames, it looks like we've got another lower high, and it looks like we're pushing back down to the downside. Once again, on the daily time frame, it looks like we've got a bit of room to move back down to the downside before another bounce. On the 4-hour time frame, we've got a bit of momentum to move back down to the downside before another bounce. We'll talk about that bounce in just 1 second. However, coming over to the higher time frames, we're going to talk about the oscillators when potentially you should expect a bounce in a second. But in the higher time frames, this macro breakdown is really just starting. If we look at the weekly time frame Heikin-Ashi's, pairing this with the Elliott wave count, you can see since this massive, I believe this was about a 4,000% rally that happened from the lows in June all the way back up to November. So since this top over here, we started a new wave count. Now over on the Heikin-Ashi's, bear in mind you discount doji candles in the opposite direction of the trend when you're looking at these. So for example, if you're looking at wave 2 to wave 3, this was pretty much all red, because when you do have a doji candle which is of different color, you do ignore these, and these were pretty much all doji candles, so you would have just taken these as a red candle. And then you can start to see candles started to come in which weren't doji candles, so you had waves of red followed by waves of green, waves of red, waves of green, waves of red, waves of green, and we're finally switching back into that red wave indicative. On the Heikin-Ashi's, we should be starting a new bearish count, and as you can see, for the Elliott waves, we've got wave 1, wave 2, wave 3, wave 4. So we should just be starting in the higher time frame wave 5. Once again, seeing these range lows that we retested. So this wave 4 down here is, miles beneath wave 2. It's looking very, very bearish, and we've already switched red on the Heikin-Ashi candles. In the EMA ribbons, you can see on the weekly time frame, we came into these as well, and we've got a strong rejection coming down from these. If we do switch over to the regular Japanese candlesticks, you can see that we had a red, green, red formation, which is a bearish pattern, and we've just started the week, and it's looking pretty weak while we are down here right now. And of course, you can see, we are trading beneath the weekly EMA ribbons at this moment in time. And we're kind of falling into the daily EMA ribbons quite strongly. We're in the middle of these. These are converging, and it looks like they're getting tighter and tighter and tighter. The tighter these get, the more likely it is to have, explosive moves in, whatever direction you think you're going to have. I personally think the tighter these get, the more likely it is that we do start a new bearish wave count back down to the downside. Now, moving on to our next chart, if we do look at, I probably should have looked at this first because this is on the daily. If we look at where our Elliott waves are, sorry, not Elliott waves, if we look at where our Fibonacci's are right now, let me clear up some of these and we'll work through them. So you can see in the most immediate one that we have in the short term is from this range low up to this range high. You can see we've lost the golden pocket, the 618 Fibonacci and the 786 Fibonacci. In fact, yesterday and the day before, we broke down, came back up to the 786, and now we're having a rejection. And on the Heikin-Ashis on the daily, you can see we're very, very strongly moving down and melting through all of these Fibonacci support levels. Now, coming back over here, let's get rid of this lower time frame chart. Let's see what's going on with the mid time frame Fibonacci. So you can see this one right here from low to high. We're literally, I keep on fat fingering this, we're literally sitting right on the last line of support, the 618 Fibonacci. This is basically bang on 6 cent, 5.95 to be precise. So if you really start losing this 0.0059, then it's looking like we're going to come down to your next Fibonacci, your 786, which is an 11% drop. Now, I personally think that, if we do lose this region, the next area to target is going to be this higher time frame 618 Fibonacci. So I'm looking at this 618 Fibonacci right here, and I personally think that if we do start losing this level, we're going to come down to your next 618 Fibonacci right down here, which is a pretty steep drop. So from where we are right now, it's looking like we could move down about another 18%. So if you are a bull, you would really want to keep your eyes on 595. If we do break beneath this, we are going to start melting down about another, 18% or so. The next target from there is you've got another 786 Fibonacci, another macro fib right down here. That's going to be a 34% drop. So once again, how we respond to this 6 cent / 5.95 cent level is really, really important. I keep on saying 6 cent or 5.9 cent. It is 0.0059. So I'm just going to say 59 so I don't say all the zeros every time I give you a price target. Now, coming back over to the weekly, if we are looking at our oscillators, as we just discussed with the Elliott wave count, that is, one very, very strong signal that we should be moving down. Pairing this with the Heikin-Ashis, turning red and looking like we're starting a new bearish trend. Pairing this with the oscillators as well. I mean, if we look at these oscillators, you can see the stochastic RSI flipped bearish a few weeks ago, and we are starting to move down since we have flipped bearish. Now, we're literally all the way up at like 92, regardless of whether you're looking at the regular stock as well. If we come back over to the Japanese candlesticks, we're down 85, which is not as bad, but you can see now we're looking at the MFI on the Japanese candlesticks, we're up at 82. We are super, super overextended in terms of the amount of liquidity that's come into these markets. In fact, if we look at the range lows, even though, we've had a sizable move back down, we're still 120% up from the range lows, and we did manage to pump about 205%. So we're still looking very, very overextended for JASMY right now, and there is a lot of room in the higher time frames for us to move down, which is why I say, when we look at the 4 hour, this 4 hour bearish divergence looks almost complete. When we look at really the 4 hour time frame, it's looking like there can be a bounce coming very soon, a very small bounce, mind you, but in the higher time frames, the daily, the weekly, all of these charts are kind of telling us that this macro breakdown is kind of just starting to take place. Weekly as well, the squeeze momentum indicator is once again still in green. So if we do clear up these oscillators just very, very quickly, I just want to kind of show you The last time we were in green, bear in mind we're in a bear market, so we reset momentum. We were in bullish territory during this little consolidation phase, and you can really see once we started to move into dark green and once we started to move into red, this is where this landslide happened down into new lows. Now, this chart is a little bit squashed, so it's hard to see, but you can see from when we switched into dark green, we actually dropped about 74%. So you definitely really don't want to see this. If you are a bull, you don't want to see us kind of resetting momentum and starting to switch back into another bearish trend, which pairing this with all the other oscillators is pretty much what the oscillators are telling us. So on the weekly, things are extremely bearish. On the daily, things are still very bearish. If we look at the squeeze momentum indicator, we haven't had too much of a sizable bearish move back down in comparison to these previous bear market corrections that we've had. So there's a lot of room for the squeeze momentum indicator to move down, even though we are already in bearish territory. If we look at the MFI, we're still above the heart line, so we are somewhat overbought right now. We're sitting at 53, 52, so we've got a lot of room to move down for here. The daily time frame stochastic RSI is, however, calling for a bounce to take place at this moment in time. And when we are looking at the 4-hour time frame, once again, this bearish divergence, as we haven't come back up to this trend line, it's looking like this bearish divergence on the 4-hour may have already played out. Pair this with the fact that the daily squeeze momentum indicator is calling for a bounce at some point soon. And if we do come over to the 4-hour oscillators, the squeeze momentum indicator is actually looking pretty bearish. It's reset momentum and it looks like it's heading into red. The 4-hour time frame for the MFI is heading down, but it looks like we've got a little bit more room to move to the downside. And the squeeze momentum indicator, the stochastic RSI on the 4-hour as well has a decent amount of room to move back down to the downside. So what I really think might be happening for the next couple of days or so is you may continue to see these 4-hour oscillators break down and further, capitulate to the downside for the next few days or so. Then you come over to the daily time frame. Once again, you might see a little bit more of a bearish move to the downside over the next few days. Maybe it's the next week or so you continue to see JASMY breaking down, but we are seeing a few signals that maybe in the next week, maybe in the next 2 weeks. Of course, I don't have a crystal ball. I can't give you the date that these are going to bounce. I can just give you the price targets I've got my eyes on, but it is looking like at some point soon these could begin to turn up. Now, bear in mind that would just really say, hey, in the lower time frames on the 4-hour, on the daily time frame, we may get a few candles that start to push up a bit. But remember, the bread and butter of this video, when you are looking at the higher time frames, these range high SFP patterns are telling us that we're going to have monumental moves back down to 0.0033. The weekly time frame, Heikin-Ashi's Elliott wave count is telling us once again we're getting rejected from these crucial levels, and we're just starting this next major meltdown to the downside, which I will give you my price targets for in 1 second. So really what I think is the most likely scenario is, as we do have more momentum to head to the downside, I think we are going to lose this 618 Fibonacci right here. I do think we're going to head down to this next 618 Fibonacci, and then I think it's likely, as we do come down to this 4.8 cent region, we may bounce up to another fib level. Maybe we'll bounce up to this 786 Fibonacci. Maybe we'll bounce up to this 1.236 Fibonacci extension. So if I clear up the chart, these are really the levels that I've got my eyes on, and this is the most likely scenario to play out in my opinion. I think we're going to come down to this macro 618 fib, and then I think we're going to come up potentially back up to these two Fibonacci levels right here, solidify another lower high, and then start to move back down to the downside. We could also move back up to the range lows right around here again, but at least in the immediate short term, what I think is going to happen is about another 18% drop. Then I think it's likely that we proceed this with about a 10% pump. Maybe even we come back up to these previous range lows. I will have to make an update as we do come down to this level. I will re-update the oscillators. I'll let you know how much room we have to move to the upside and what my next prediction will be for the markets. But in the immediate short term, let's talk about these on another day. In the immediate short term, I do believe we're going to lose this Fibonacci level round about 595, and I think we're going to head down to 0.0489, which is, once again, about an 18% drop from where we are at this moment in time. So that's really my prediction. I think we're coming down to this 618. Once we do, a lot of these lower time frame oscillators will be saying, hey, we probably can have a little bit of a bounce, and then it's likely, of course, in the higher time frames, we continue to lower price targets, just like I've been talking about with these higher time frame charts. Now, wrapping up on the video, my price targets, JASMY BTC before we jump into JASMY USD. So like we said, I mean, at the start of the video, we told you, obviously since our last video, we've started to move down a bit. I still have the same price target for JASMY BTC down at the 1.236. We have started to move down a bit. So I think JASMY is probably going to drop another 51.6% or so against its Bitcoin pair. More about that in my previous video, although, you know, once again, I've explained this already before, so I won't waste any more time explaining it again. We looked at how much I believe Bitcoin's going to drop. We looked at Fibonacci targets for JASMY, and subsequently, when we pair these two together, we looked at the most plausible scenario for JASMY to drop against the US dollar. And that is in accordance to the JASMY BTC pair. If we're looking at how much I think Bitcoin's going to drop, and we subtract this from how much I believe JASMY BTC is going to drop, we have this level right down here, just underneath a 1.236 Fibonacci level. You can only get this price target if you're also looking at the JASMY BTC chart and talking about, you know, how low I believe Bitcoin's going to drop down to. So from where we are right now, as you can see, we've started to move down. I do believe we're about another 83% drop away from coming down to potential bear market lows. Of course, we take things one price target at a time. In the immediate short term, JASMY against the US dollar is likely to drop about another 83%. We do also have a Fibonacci target down here, a 76% drop, which is backed by this swing low up to this swing high, 1.236 Fibonacci. So that's really all I've got for this video, my friends. Like I said, higher time frames, the bearish move is really just starting, but in the lower time frames, I do expect a move back down to this 618 Fibonacci, a 20% drop, preceded by a slight bounce, and then I believe, you know, the higher time frame oscillators are really going to gear us up for that next leg back down to the downside. But for today, that's all I've got. As always, my friends, if you enjoy my content, let me know down below by leaving a like and a comment. Share the videos with your friends. Also, be sure to come and follow me over on Twitter at 618_cowboy. Come and join the Discord if you head over to my YouTube. Click on the About section. You can see my Twitter, Discord, Instagram, and merch store are all linked down below. But for today, that's all I've got. It's been your boy Cowboy Trades. I'm out, my friends. Peace.